When you talk about the internet, it is all about the advertising and really about video advertising. We've seen this with Facebook just starting to announce video on Instagram, and of course Twitter has Vine. Well, Tremor Video is looking to go public this week. It is hoping to raise $90 million, pricing its shares between $11 and $13 a share. This company, though, competes with some pretty big names like Hulu and YouTube, also with some of the broadcasters that have their own video like CBS. So Francis, can Tremor really compete against these big players, and is this why they need to get more money?
I think in the short term they have a little bit of a technological advantage. Their sales were up 47% to 25 million for the March quarter of this year versus last quarter. The gross margin was up 44% from 32%. So they've done some technology enhancements, and so their pricing model is based on a performance, and that means if people see the video or they stay on it or they do a mouse over for a long enough time, their revenue increases. So it's not exactly a subscription model, but it's good in the sense that they don't have to sell a new piece of equipment, every single time. So I think they have good upside momentum. I'm a little concerned about their larger competitors. I think what Tremor has is a little bit unique right now. The question is, can they parlay that by adding more customers, more top-line revenue, and getting to a break-even basis. And the question then is can they continue their short-term advantage? And it's a very, very competitive market, as you said. I think I like the IPO, though, because of their revenue increase and their gross margin increase and their lead in the field, apparently.
Well, it is a huge market, and it is growing because that's where all the money is on the internet, is advertising, especially with video advertising. Then we have another company going public, and that is GDC Technologies. GDC is known for their digital cinema servers for movie theaters, and they're looking to raise $75 million, pricing their shares between $12 and $14 a share. So digital cinema now, just recently we had some very huge big name directors go on CNBC and said that the film industry could implode. So this makes me a little nervous. Right,
that's a little scary. The other thing is with this company is only as good as its last digital server sold, and they have to sell digital servers. They don't have any recurring revenue, so when it's over for them, it's over. And their business is seasonal. So if you look at a PE based on 2012, it's 10.7, which seems low. But there's that huge cloud of tornadoes. You said that Spielberg and Lucas said there might be an implosion in the business, which means that there'd be a contraction of movie theaters. And I'm also wondering, for them, they have the largest installed base, and that's well and good. The question is, what's the total market? Are they getting near the saturation point? And I don't really know that. But what I do know is when they get near the saturation point, their sales could plummet. So I'm negative on that one.
All right. Well, there you have it. Francis is negative on GDC, but he does seem to think that Tremor Video is an interesting company to take a look at. So that's Francis Gaskins of equities.com, and I'm Deborah Borchardt with The Street.